Hello everyone, and thanks for watching Edupedia Word videos. In this video we are going to start a new part related to public finance. The first chapter will be dedicated to the studying of the meaning and scope of public finance. For that, we are going to define public finance. Then we are going to talk about the importance and the subject matters of public finance. After that, we are going to focus on the federal finance, and by the end, we are going to talk about the public finance and private finance similarities and dissimilarities. So let's get started. What does public finance mean? Indeed, public finance is a field of economics concerned with how a government raises money, how that money is spent, and the effects of these activities on the economy and society. It studies how governments at all levels, national, state and local, provide the public with desired services and how they secure the financial resources to pay for these services. Public finance deals with the finances of public bodies, national, state or local, for the performance of their functions. The performance of these functions leads to expenditure. The expenditure is incurred from funds raised through taxes, fees, sale of goods and services and loans. The different sources constitute the revenue of the public authorities. Public finance studies the manner in which revenue is raised. The expenditure is incurred upon different items, etc. Thus, public finance deals with the income and expenditure of public authorities and principles, problems and policies relating to these matters. Now, let's find out some common definitions. According to Charles Bastable, in his Public Finance 1892, for all states, whether crude or highly developed, some provisions of the kind are necessary, and therefore supply and application of state resources constitute the subject matter of a study which is best entitled in English as public finance. According to Dalton, one of those subjects which lies on the border line between economics and politics, it is concerned with the income and expenditure of public authorities and with the adjustment of one to the other. And according to Harold Groves, a field of inquiry that treats the income and outgoes of governments federal, state and local. All the definitions stated above illustrate the scope of public finance. From these definitions, we can conclude that public finance is an inquiry into the facts, techniques, principles, theories, rules and policies which shape, direct, influence and govern the use of scarce resources with alternative uses of the government. What about the importance of public finance? Well, let's talk about the provision of public goods. For providing public goods like roads, military services and street light sets, etc., public finance is needed. Business firms will have no incentive to produce such goods as they get no payment from private individuals. Moreover, public finance enables governments to tackle or offset undesirable side effects of a market economy. The side effects are called spillover or externalities. For example, pollution. The government can introduce recycling programs to lessen pollution, or they can make laws to restrict pollution or impose pollution charges or taxes on activities that bring about pollution. Besides, public finance helps governments to redistribute income. To reduce the inequality in the economy, the governments can impose taxes on the richer people and provide goods and services for the needy ones. Finally, public finance provides many programs for moderating the incomes of the rich and the poor. Such programs include social security, welfare, and other social programs. Moreover, the acceptance of the principle of welfare state, the role of public finance, has been increasing. Modern governments are no more police states as the classical economists viewed. As the scope of state participation in the economic activity is widening, the scope of public finance has also been increasing. Generation of employment opportunities, control of economic fluctuations like boom and depression, maintaining economic stability, etc., are some of the thrust areas of the governments through fiscal operations. The subject matters of public finance can be broadly classified into 6 categories: public revenue, public expenditure, public debt, financial administration, economic stabilization, and federal finance. So let's start with public revenue. The income of the states is referred to as public revenue. In this branch, we study the various ways of raising revenue by the public bodies. We also study the principles and effects of taxation and how the burden of taxation is shared among the various classes of society, etc. Talking about the public expenditure, it deals with the principles and problems relating to the allocation of public spending. We study the fundamental principles governing the flow of public funds in the different channels, classification and justification of public expenditure, expenditure policies of governments and the measures adopted for welfare state, etc. What about the public debt? The governments borrow when its revenue falls short of its expenditure. Public debt is a study of various principles and methods of raising debts and their economic effects. It also deals with the methods of repayments and management of public debts. Now, let's focus on the financial administration. In fact, the financial administration deals with the methods of budget preparation, various types of budgets, war finance, development finance, etc. Thus, financial administration refers to the mechanism by which the financial functions are carried on. In other words, financial administration studies the organizing and disbursing of the finances of the state. Last but not least, the economic stabilization and growth. The use of public revenue and public expenditure to secure stability in levels of prices by controlling inflation as well as deflationary pressures is studied. Similarly, the income and expenditure policies adopted by the government so as to attain full employment, optimum use of resources, equitable distribution of income, etc. are also studied. Eventually, under federal finance, we study the principles and policies governing the redistribution of functions and funds among the public authorities in a federal setup. In a federal setup, there are different levels of governments, central, state, and local. Let's talk about public finance and private finance here. And the understanding and the study of public finance is facilitated by a comparison of the public or government finance with private or individual finance. Such a comparison will help us to know how the aims and the objectives and methods of public finance operation are similar or differed from the financial operations of the individual. 1. Both the state as well as individual aim at the satisfaction of human wants through their financial operations. The individuals spend their income to satisfy their personal wants, whereas the state depends for the satisfaction of common or social wants. 2. Both the states and individual at times have to depend on borrowing when their expenditures are greater than incomes. 3. Both public finance and private finance have income and expenditure. The ultimate aim of both is to balance their income and expenditure. For both kinds of finances, the guiding principle is rationality. Rationality is in the sense that maximization of personal benefits and social benefits through corresponding expenditure. Finally, both are concerned with the problem of economic choices. That is, they try to satisfy unlimited ends with scarce resources having alternative uses. Now let's talk about the dissimilarities. And here, you should know that the private individual has to adjust his expenditure to his income. That is to say, his expenditure is being determined by his income. But on the other hand, the government first determines its expenditure and then the ways and means to raise the necessary revenue to meet the expenditure. The government has large sources of revenue than private individuals. Thus, at the time of financial difficulties, the state can raise internal loans from its citizens as well as the external loans from foreign countries. And in the case of private individual, all borrowings are external in nature. 3. The state, when hard-pressed, can resort to printing of currency as an additional source of revenue. In fact, during emergencies like war, it meets its increased financial obligations by printing new currency. But an individual cannot raise income by creating money. Eventually, the state prepares its budget or estimates its income and expenditure annually, but there is no such limitation for an individual. It may be for weekly, monthly, or annually. Moreover, a surplus budget is always good for a private individual, but surplus budgets may not be good for the government. It implies two things. The first thing is that the government is levying more taxes on the people than is necessary, and the government is not spending as much as the welfare of the people as it should. Besides, the individual and state also differ in their motives regarding expenditure. The individuals hanker after profit. Their business operations are guided by private profit motive, but the state's expenditure is guided by the welfare motive. Moreover, the private individual spends his income on various items in such a manner as to secure equimarginal utilities from them. The government, on the contrary, does not give as much importance to this law as a private individual does. Modern governments sometimes incur certain types of expenditure from which they do not derive any advantage, but they do incur this expenditure to satisfy certain sections of the community. Last but not least, individuals always see quick returns. They save only a small amount for future and spend more to satisfy their current needs. Individuals tend to think more on present as they are dead in the long run. Similarly, they seldom spend if it does not yield any money income. On the other hand, state has a long-term perspective of its expenditure. It does not care only for immediate benefit. State depends on projects having a long gestation period. The burden of taxation is borne by the present generation in the interest of long-run welfare of the community. Similarly, sometimes government may have to spend on schemes which not yield any money income at all. For example, the public health. Moreover, As an individual's spending policy has very little impact on the society as a whole, but the state can change the nature of an economy through its fiscal policies. Besides, the pattern of expenditure in the case of private finance is often influenced by customs, habits, social status, etc. The pattern of government expenditures is guided by the general economic policy followed by the government. Moreover, private finance is always a secret affair. Individuals need not reveal their financial transactions to anyone except for filing tax returns. But public finance is an open affair. Government budget is widely discussed in the parliament and outside. Public accountability is an important feature of public finance. Finally, individuals can plan to postpone their private expenditure, but the state cannot afford to put off vital expenditure like defense, famine relief, etc. Findlay Shiraz says that compulsory character is an important feature of public finance. So, this is the end of this video. The remaining portion will be explained in the next video, which will be related to the meaning and scope of public finance. So, thank you very much for your attention.